Good evening and Happy New Year from Options Tender. We are going into 2024, and I only really have one piece of good news, and this type of environment that I am projecting is very volatile and can make people lots of money. So I'm going to show you a little bit different take here today. What I'm going to show you is my primary Elliott wave count, show you what I'm looking at from the high point of view, starting from the monthly on SPX, going all the way down to the 65-minute. And I lost all my indicators sometime back, and I was reintroducing them to you and reformatting them on my desktop. So this one kind of got lost in the mix, and I have the Elliott wave pattern and a two indicators that I'll go through. So make sure you stick around, and if you're new here, go down to that bottom right hand corner, hit that Options Center logo and subscribe, and don't forget to like the video. If you like the video, it helps tremendously grow this channel, and I really appreciate it. People have been doing so and participating here, and that's fabulous, and I appreciate you for it. So let's have a wonderful 2024. All right, so the bad news is that I think the economy is going to start to fade, and I do think we're going to see some pullbacks, some deep pullbacks in the market. So let's go ahead and jump right into it with SPX on the monthly time frame. Now we're looking all the way back in the maximum amount of information from 1929, and I'm looking at this being a 1 into a wave 2, a nice sharp wave 2 and an extended wave 3. Okay, so that's the information we have so far. So with that said, going into 2000 and also 2008, those two crashes we had there, I'm counting that as a wave 4 ABC correction. Now, at that point, we can start focusing on what is this wave 5. So if we're looking at this being a major wave 5 correction, then we'll dive deep into what might happen here. And I'll already start to tell you that and I'll show you on the weekly time frame that if this wave 5 ends here, we have a 5-wave move up. Remember, that can be a start of another wave 1. Okay, so we can't cross underneath this wave 4. And what would happen is this wave 4 holds, we have a 1-2 setup. All right, and then we start heading for an extended wave 3, or there's different ways that could happen, but we have a 1-2, and then we start heading higher for another bull market that could last years upon years. So, this is not a doom and gloom type video to where I think that we're going to retrace, back all the way here to the 1970s. We're not, we're crash the market until 90% of the market or so. I don't think that's going to happen. I think this wave 4 is going to hold, and we're just starting a wave 1, and now we have to correct. And it's going to be pretty devastating, this type of move, because this is such a big chart. So we're on the monthly time frame. Now, if we do, you see how we came really high up here on the Elliott wave. This is the Elliott oscillator. So what I have here is I have two indicators. I have the Elliott oscillator, and you see I'm highlighting this zigzag. They call it the zigzag high-low. So if you go to Thinkorswim, you go search it, and you're going to find zigzag high-low and the Elliott oscillator. Okay, so I use those on my Elliott wave screens while trying to count the speculative, Elliott wave is speculative, count, and this helps me to kind of sort things out. Now, this Elliott oscillator helps to tell us that we're going into a possible wave 4 and a 5, and you get certain divergences. We'll see those on the lower time frames. And so if we make a new high here, We have not made a new high here. You see how high that oscillator came. If we make a new high here, we're going to have a huge negative divergence here. All right. I don't know that we're going to make a new high. My primary scenario is that we already had the high in, and then we've been talking about in the last few videos, what if we grind to new all-time highs? So I gave you those scenarios, I believe 3 days in a row, but those were my alternative scenarios. So let's focus back on our primary that says that this 5 has already topped out in 2022, and that we're starting to top out again without making a new high. I know NASDAQ and the Dow did make new highs. That doesn't change anything. All right, so let's move down to the weekly time frame. See if we can learn something a little bit more here. On this Elliott wave picture, this right here is going to be that ABC for the wave 4 that we just looked at on the last chart. So this major cycle wave 4 has ended, and now we're focusing on the end wave 5 or possible new wave 1. Okay, so we have this zigzag. You see how that's all one line? You don't get any zigzags in there. That's counted as a wave 1. So it does a pretty good job at giving us our wave counts here. If you follow it, wave 1, you see it, wave 2, 1, 2, 3, and I know that I do have different wave counts for this, but just looking at the zigzags, we have a wave 3 into a wave 4, and then a wave 5 ends here to start our wave 3, and then we have an A, B, C, D, E expanding triangle for wave 4, and we're ending at wave 5. So that would complete this full 5-wave scenario sequence. And this could be a possible wave 1 now that we're correcting into a wave 2. And so, I really should put that in there. So this wave 5 will become either it's a huge scenario where, let's put this in just white, huge top here, and we correct just an ultimate correction down to whatever, maybe back down to this wave 4, and that's down to 683, just a devastating correction. Or we have a new wave 1, and that's how we're looking at it. Is it this is a 1, and we need to correct into a wave 2. And then we'll have another bull market for many, many years. So after we complete our wave 5, now we have an A down here, a 3-wave move. 1, 2, 3, 4, 5 for an A, B, C for an A, B, C for a B, and we'll look on the lower time frames to give you a better look at those moves there. And now we need to have an impulse wave down for C. So that would be our ABC flat just to start our larger correction. So we're looking for an impulse wave down here, which should be a pretty aggressive 5-wave move to complete the ABC in red. Now that brings us to our A for the larger primary correction for A in the yellow. And now we need to get a 3-wave move up for a B. And remember that B can go all the way up to test the highs again. And really, I don't want to focus on this B wave too much, but really it could surpass up here, okay, if this is an expanding B. But we want to focus on just a simple fact that we have an A in yellow, we need to correct at a B, and this is correctly positioned at a 62% retracement of this entire move. So that B would be a 62% retracement, which is a nice deep retracement, could go further. And after that, a much larger impulse 5-wave move down for C. Now that brings us into our corrective areas. Before I move on, this 100%, is the wave A from the top of wave B. So that would equal, A would equal C in this 100% scenario. So that's why that A is there. And that would bring us right into this 50% retracement of the Corona blast off there, the Corona rocket move into that wave 5. That's 50% retracement. We bounced off that 50%, and we should get back to that zone, the 62% retracement zone again, where it should be considered a fake break. Okay, everybody's going to get really, really bearish in this massive move down, and we possibly break through the 50% and then have a fake break. Maybe we make it all the way down to 62. It could go further if it wants, but we have a fake break, recapture that 3,500 area, and then everybody's going to say the bear market is over. That's when you should start seeing divergences. You should start seeing, and all the indicators that we talk about each and every day, you should see a lot of positive divergences, and we should start rocketing back up for a wave B. It should be pretty messy, wave B. It can be sharp. It can be complex. There's a lot of things that could happen, but people are going to be exuberant and say the bear market is over. We're going into a new bull market. Watch out. We had a ABC correction, and we're going to all-time highs and much further. I don't think that's the case. I think we'll get all those people sucked up. We'll have a nice huge B wave, and then we really, really have the crash. This is going to be a lot more intense than this 5-wave move. We'll have a 5-wave impulsive move, relentless down to the 50% retracement. Now this retracement is this entire move from our large cycle, our major cycle, wave 4, from the bottom of there to our high here, wave 5. This would be the 50% at 2,700 all the way down to 2250, and I think it's more likely we come down to this 2250, so we can test the lows of this wave 4, this Corona crash that we have. We never came down to test this. I think this is a huge test. I think we get look at this, all this resistance here now turned into support. I think that we'll get the support again above this 2200 area. We'll just call it 2200 because that will be a zone. I think we'll have to spike through. Nothing really ever stops exactly on these. These are zones. Okay, so we'll call this 2200 zone. I think that this A, B, C flat will be our correction for our wave 2, and then we start a new bull market. This is going to take a lot of time. It's going to take a couple years to play out. Now, when focus on this oscillator a little bit, when we had our last rocket move here from the Corona crash and blasted off, you see we started making divergence here on the weekly time frame, a negative divergence. So this oscillator is telling us, hey, we're into the wave 4s, and we're going to complete at wave 5 sometime soon. Now this one kind of shows our positive divergence when we had a 5-wave move down. We corrected. That's when it made the spike down, corrected, and came down further to make lower lows there. But we had positive divergence on the weekly time frame, showing that ABC correction was nearly over. See, it works both ways for corrective moves and for impulse moves. So now with this last move we had here, coming from A to B into now 2024, we had an A, B, C correction. And when we had our first initial A move, we had that nice high spike here, corrected back down to the 0 line, and then now we're having negative divergence here at the B. So super important. This is a big time divergence, being on the weekly time frame. So now we're going to see this continue the correction to the downside. And when we get down to these lower areas, whether it be the 3,500 or the 3,200 zone, we should start to see some positive divergence on this oscillator here. Okay, and then we should have our bounce from there. All right, let's go down to the daily time frame. And there's not a whole lot more to talk about. I'm just going to show you on different time frames now, just so you can get a different, a smaller perspective. Okay, we have our Elliott wave. We named it the flat pattern because that's our primary pattern that we're looking at. And this being just the initial flat pattern of a larger flat. All right, let me squish this in just a little bit more so you can see the A. All right, so we have a leading diagonal. I believe this is a 5-wave move down for A, or you can count it as an ABC into A, ABC into B, 5-wave move down for C. So 3, 3, 5 into this larger A of our flat pattern. And you see our A, B, that's a 3-wave move for A B here. I know that some people have things like that. It doesn't matter. B into a 5-wave move up for C. And that's just a minor degree A down to a B correction. And so overall, a 5-wave move up for C. So that goes into our intermediate wave B here in the red. Okay, so 3-wave move down, 3-wave move up, and now we need our 5-wave